BIFS 2013 Islamic Financial System. Introduce group member
Ahmad Najee bin Muhammad Nasser,
Muhammad Ridwan Naim bin Muhammad Hashim,
Fatin Naji Ha binti Yusri,
dan Nur Irdina binti Muhammad Amri.
Bank Islam versus Home Loan Bank PDS for vehicle financing.
Assalamualaikum warahmatullahi wabarakatuh, and a very good afternoon to our respected lecturer, Dr. Iman Idin Abaji, for trusting us to complete this task in addition to the guidance by him. Today, we from Group 6 would like to deliver our assignment 3. Our topic is Hong Leong Bank versus Bank Islam PDS for vehicle financing. Before we start our forum, let us introduce ourselves first. My name is Muhammad Rizwan bin Muhammad Hashim. My metric number is 292769.
My name is Fadila Syahid Yusri. My metric number is 292552.
My name is Nur Irdina binti Muhammad Amri. My metric number is 292638.
My name is Ahmad Najee bin Muhammad Nasir and my metric number is 292635. Okay, if we talk about conventional and Islamic products, what are differences between the two? Do you guys know?
Yes, I know. The difference between conventional and Islamic based on this topic is conventional vehicle loans involve paying interest, which is the profit the bank earns for lending money. This interest occurs over the loan term and is typically based on principal amount borrowed. In Islamic finance, interest is strictly prohibited under Sharia law due to its exploitation of debtors. Instead, Islamic vehicle financing operates on principles such as profit sharing, that we call is murabahah, or cost plus financing, that we call is murabahah. In murabahah, for example, the Islamic bank purchase the vehicle and sell it to the borrower at higher price, allowing the bank to earn a profit without charging interest.
I agree with you. Furthermore, in conventional vehicle loans, the bank retains ownership of the vehicles and the borrower completes the loan payments. During the loan term, the borrower effectively leases the vehicle from the bank. This arrangement gives the bank legal ownership and allows for repossessions in case of default. In contrast, Islamic vehicle financing emphasizes genuine ownership. This Islamic bank and the borrower enter into a partnership where both parties co-own the vehicle from the outset. This co-ownership model aligns with Sharia principle, ensuring that both parties share in the risks and rewards of ownership. Like, do you agree with me, Irina?
I think I agree with you. Next, conventional vehicle loans typically operate on creditor and debtor basis. The bank extends credit to the borrower who assumes the risk associated with the loan. The borrower is obligated to repay the loan amount plus interest regardless of the vehicle's performance or market conditions. Islamic vehicle financing, however, follows a partnership model known as musyarakah. In musyarakah, the Islamic bank and the borrower became partners in the ownership of the vehicle. Profits and losses from the vehicle's use or sale are shared between the partners based on the agreed upon ratios. This cooperative approach fosters a more equitable distribution of risk and reward compared to the conventional loans. Do you have another point or opinion as me?
Okay, thank you, Elina. Yes, I also have a point which is in the conventional vehicle loans, the borrower bears almost all risks associated with the vehicle. So these risks include accidents, natural disasters, eminent domain, or foreclosure in case of loan default. So the bank's risk is limited to the non-payment of the loan and potential loss of the vehicle. So in Islamic vehicle financing, risk is the share between the partners due to the co-ownership of the vehicle. Both the Islamic bank and the borrower are responsible for potential losses or damage to the vehicle. This shared responsibility encourages careful consideration of risk and emphasizes the partnership collaboration nature under Islamic finance principles.
Right, I think let's move to the next part, which is the Islamic finance issue related to the product discussions. You guys know what? I've been looking into the vehicle financing option from Hong Leong Bank, and I noticed that there is some issue related to the product discussions in terms of Islamic finance. Like, have you noticed that?
Yes, I have noticed, which is one major issue that I noticed is the limited information on Sharia compliance. The PDS does not truly explain how the vehicle financing adheres to Sharia principles. This includes detail on profit rate, justification, and risk sharing mechanisms, which are crucial for Islamic finance.
That's true. That is really concerning because some customers need to be assured that their financial dealings are fully compliant with Sharia law. Without a clear explanation, it's hard to know if the profit rates are fair and how risks are shared.
Yeah, I truly agree because another problem that I noticed is the hidden fees. The terms and conditions are quite complex and it's not always clear that the total cost will be, and this lack of transparency can lead to unexpected expenses, which is goes against the Islamic values of fairness and transparency.
Exactly. In Islamic finance, all costs should be explicitly stated in the agreement point. It is essential for maintaining honesty and avoiding any form of deception. These hidden fees can be really undermine trust.
And then there's the issue of riba. The bank financing involves interest on loans, which is strictly prohibited in Islamic finance. So charging interest allows the lender to profit without sharing any risk, which is considered exploitative and unjust.
Absolutely. Islamic finance should be based on profit and loss sharing mechanisms. Both parties should share the risks and rewards, not just the borrower bearing all the risks with the lender earning interest.
Moreover, the PDS doesn't show how the profit rate is linked to the fair market value of vehicle. The raises concern about excessive profit margins. If the profit rate isn't justified by the asset value and risk sharing, customer might end up paying more than what's planned.
That's right. This disconnect can lead to the unfair treatment of customers. These profit rates then should be transparent and reflect to the actual market conditions. Otherwise, it goes against the principles of fairness and equity in Islamic finance.
Also, the financial institutions need to ensure their products are not only compliant with Sharia principles, but also transparent and fair to maintain trust and confidence among their customers.
Agreed. Clear and detailed explanations, straightforward terms, and adherence to Sharia law are essential for the ethical Islamic finance. Without this, it's hard for customers to have confidence in these financial products.
Yes, it's crucial that banks like Hong Leong make the adjustment. By doing so, they can better serve their customers and uphold the integrity of Islamic finance principle.
Thanks. So, can we move to the next part, which is the methodology, formula, and concept in the product disclosure sheets for Hong Leong Bank and BIFS? Because I think they seem to have quite different approaches.
Yeah, that's interesting. So what are the main differences between them?
Well, for starters, Hong Leong Bank uses a higher purchase facility while Bank Islam use the concept of murabah. Specifically, murabah in the purchase ordered by, which is we call MPO.
Can you explain what each of those means?
Can I explain? Okay, in Hong Leong Bank's hire purchase, the bank is the owner of the vehicle until the customer completes all repayments. Interest is charged at the fixed rate per annum. Once the repayment is done, the ownership is transferred to the customers.
I'm sorry, and how does Bank Islam Murabaha work? Like, I think Bank Islam Murabaha is a sale contract where the bank discloses the assets, price, and profit margin to the customer. The bank purchases the vehicles first and then sells it to the customer and at an agreed profit margin, with the customer paying on a different basis.
What about the methodology each bank use for their vehicle financing?
I can help with that. For Hong Leong Bank, they start with credit evaluation to assess the customer's credit worthiness. Then income verification to ensure the customer can repay the loan. They determine the loan without They determine the loan amount and terms, verify down payment, set the fixed interest rate, and ensure the customer meets insurance requirements. Finally, they go through the application process.
And for the Bank Islam, start with the purchase order from the customer. Then they agree on the pricing. There is a one, which is we call a promise to purchase by the customer before the bank acquires the asset. The bank then purchases the goods, delivers them to the customers, and customers pays on different basis. Finally, the ownership is transferred to the customer.
So what about the formula they use for calculating payments?
For the Hong Leong Bank, as you can see in the slide, the formula for the monthly installment is M equal P plus P times I times T divided by 12.
And the formula for the total repayment amount is R equal P plus bracket P times I times T bracket off.
What if someone wants to fully settle the balance before maturity?
The formula for that is R equal TC times N bracket N plus 1 bracket off divide with N bracket N plus 1 bracket off. where R is mean is the total repayment amount, PC meaning is the total contract amount, N is the number of month paid, and N is the total number of months in the loan tenure.
And what happens if they fail to fulfill their obligations? I think for Hong Leong banks, late payment charges are imposed at the rate of 8% per annum on the amount in arrears. But how about Bank Islamics?
For Bank Islam calculates the monthly installment with the formula is bracket P times R times T plus P bracket of divide T, where P is the principal amount, R is the profit rate, and T is the financing tenure in years, and T is the number of months.
This is quite detailed. So it's clear that each bank has its unique process and calculations. So thank you for the explanation. Okay, now let us move to the next part, which is the discussion between Bank Islam and Hong Leong Bank. Does anyone want to start the discussion session first? I see that Fatih is excited to share something about these two banks.
Yeah, thank you, Nasby. The first point that I would like to share is about financial organizations. In Hong Leong Bank, as a traditional banking institution, Hong Leong Bank offers conventional vehicles financing options that include flexible down payment and repayment terms. So, customer can choose between fixed or variable interest rates, allowing them to select the more suitable financing arrangement based on their personal preference and financial stability. This flexibility makes Hong Leong Bank an attractive option for the seeking straightforward conventional banking financing solutions.
In contrast, Bank Islam operates under the principle of Sharia compliant Islamic finance. Instead of using conventional interest-based loans, Bank Islam employs methods such as leasing, we call ijarah, and cost-plus financing, we call murabah. This Islamic finance concept ensure that the bank's products adhere to ethical standards prescribed by Islamic law, providing an alternative for customers who prefer or require Sharia compliant financial products.
Yes, I agree with you. If we look at terms of repayment and charge aspect, Hong Leong Bank is known for offering a wide range of options regarding down payments, loan tenures, and repayment terms. Customers can choose terms that best fits their financial situation with options to make larger down payments for lower monthly installment or extend the loan tenure for reduced monthly payments. However, these loans might include special costs such as processing fees or penalties for early settlement, which borrowers should consider when evaluating the overall cost of the loan.
So, but in Bank Islam, adhering to Sharia principles, Bank Islam repayment plans are structured differently from conventional loans. The terms of the repayments may include fees for late payments or processing, but they avoid interest charges, which are prohibited in Islamic finance. Instead, profit rates or rental fees are used. So these terms provide an ethical and compliant way for customers to finance their vehicles while adhering to their religious belief.
Your point sounds good. Like, based on my reading, we also can see that the discussion from the benefits and drawbacks. The primary benefits of choosing Hong Leong Bank for vehicle financing, including the flexibility and speed of their services. The bank ability to offer various repayment terms and down payment options, along with the potentially quicker processing times, make it an attractive choice for many customers. However, for individuals seeking Sharia compliant financial products, the conventional nature of Hong Leong Bank's offering may increase.
From a Bank Islam perspective, customers who are looking for Islamic finance solutions will find Bank Islam appealing due to its adherence to Sharia principles. The bank's financing arrangements are structured to be compliant with Islamic law, providing ethical financing options. However, these terms might differ significantly from traditional financing, which could be a drawback for borrowers accustomed to conventional loan structure. The terms and conditions might also seem less flexible compared to the traditional banks.
Yes, so the last one is in services and support for customers aspects. As we all know, with an extensive branch network, Hong Leong Bank offers customers convenience access to its services across a wide geographical area. So this large network can lead to faster processing times and easier access to customer support, making the financing process more streamlined and user-friendly. So the bank also provides a variety of customer support options, ensuring that borrowers receive assistance when needed.
On the other hand, Bank Islam specializes in providing Sharia compliance financial services, catering specifically to customers who seek Islamic banking solutions. This focus means the banks offer specialized advisory services to help customers understand and navigate Sharia compliance financial options. While their branch network may not be as extensive as some conventional banks, the personalized service and expertise in Islamic finance make it valuable resources for those requiring such service. I think that's all from this part. Let us move to the conclusion part.
Alright guys, I think we come to the end of our forum. We have discussed quite a lot about the differences, the issue, the methodology, concept and formula, and the discussion part in the topic of Bank Islam versus Hong Leong Bank PDS for vehicles financing. I would like to conclude that in conclusion, choosing between Hong Leong Bank and Bank Islam for vehicles financing depends significantly on individual preferences, financial priorities, and the importance of adhering to specific financing principles.
Hong Leong Bank offers conventional financing with flexible repayment options, a wide network of branches for accessibility, and potentially faster processing times. It suits individuals looking for conventional loans such as flexibility in payment terms, while Bank Islam specializes in Sharia-compliant financing, catering to customers seeking Islamic principles in their financial needs.
While it aligns with the Islamic finance framework, it might have different payment structures and might not suit those accustomed to traditional loan techniques.
However, we as Muslims should stay away from getting involved in things that violate religious Sharia. So before we end our forum session today, is there anyone who would like to add more information? No. So I think that's all from us. Thank you.
Thank you.